Hey guys, welcome to my channel. Today we're going to be going over a 44 unit multifamily that was sent to us by a broker that we've had a relationship with. So we're going to go over the actual numbers that they said that the property is operating right now, and then we're going to do our own pro forma on it and see whether this deal is a yes, we buy it, or no, we don't buy it. Before I start with the numbers, please subscribe to the channel. Hit the like button, hit the notification so we can keep sending you, keep making these cool videos for you. Okay, so we have 2 bedrooms. They're all 2 bedrooms, 44 units, all exactly the same size, square footage wise. The average rent is $800. So what they did was take $800, it's $35,200 a month. We put in a vacancy. They put in a vacancy rate of 5%, which makes sense in the area. That equals out to $33,440. You times that by 12, you get $401,280 a year in total income, right? We're looking for the NOI, right? So we can value this property. $401,280 times a 50% expense ratio. I've talked about expense ratio before. It could be 40, it could be 60, it could be 70, it could be 30, it doesn't matter. But on average, we do 50% expense ratio. That brings us to $200,640 a year of NOI, right? So we got to the NOI. The going cap rate in the area is between 6.25 and about 6.75. So what we did was take an average of the cap rate. So $200,640 times 6.5% equals $3 million. This is the actual numbers of what the property is operating right now. It's actually operating less than that because the vacancy rate is actually somewhere in the 10%, 10 to 12%. Okay, so this is one of the reasons why you want to actually get the numbers and then do your own pro forma on how everything's going to be operating when you are pretty much done with the property or put your business plan into the property, right? So I'm going to explain to you how we reverse engineer the numbers so we can actually get to an offer price. It's kind of similar to when you flip a house, right? You figure out what the retail price of that house is, then you minus the rehab, minus closing costs and all that, plus your profit in there, and that's where you come up with an offer price, right? So I'm going to explain to you how essentially it's the same thing in multifamily with just a couple of different variables, right? So here's our pro forma numbers that we come up with. Don't let a broker tell you what the pro forma is. They can send you a pro forma all day long, but you have to verify, right? Trust but verify. So we verified that we can get an average rent of $1,000. That's a $200 bump on rents. This owner has had this property for over 10 years and really doesn't like to push the rents, right? So there's a lot of, that's where you can add value, right? And also, this is the reason why this is an average of $1,000 is because we can get a whole lot higher because we can use the student housing play on this one, right? This property is about a mile from a huge university, so we can probably rent a 2-bedroom for $1,200 because we can charge $550 to $600 per bed. But anyways, we're gonna just use one tenant versus student housing. Right? If you get student housing and you get more money, then that's icing on the cake. But you want to stay conservative even with your pro forma. So here we go. $1,000 a month equals $44,000 a month in total income. We do a vacancy rate of 5%, which is normal in that area. It's actually a little bit less, but again, being conservative with the numbers. You get to $41,800 a month in total income after the vacancy rate. You times that by 12. It's $501,600 a year. We do an expense ratio again of 50%. If you get to once you get put your business plan in and you're down 42%, then that's 8% of, again, like I said, down to the bottom line. You're adding value, but we're going to use 50% expense ratio because that's the going rate. $250,800 a year is your NOI, right? That's what we want to get to. Again, we're going to use the 6.5% cap rate because that's the going cap rate. $250,800 divided by 6.5% cap rate gives you an ARV, after repair value, or stabilized value. There's a bunch of different terms for the same term. It's pretty much what the value will be once you've put your business plan in place and you've gotten everything rehabbed and all your rents close to the $1,000 average. That's a $3.9 million ARV. So what you want to do is you want to reverse engineer the numbers back to an offer price. So if we put a business plan up at 3 and we conduct the business plan and we get a 3.9 million appraisal a year down the road, your average loan is usually 75% LTV, what they call loan to value, right? So if an appraiser appraises at 3.9 million, you do 75% of LTV, that's a $2.9 million loan. So what you want to do is you want to make sure that your offer price comes in below that number, because if you're above that number, you're going to be over water, right? Underwater on the property, right? You're going to owe more than what the property is worth. So our offer price is always going to be $200,000 or $300,000 less than the actual LTV once we know what the ARV is times the loan to value, right? 2.9 million. So our offer price on this property was 2.7 million. 2.7 million was the most what we were going to pay. And you say, well, why would you go $200,000 off? I mean, that's a ton, right? Well, we're talking millions of dollars here, right? If we make one mistake, right? If the cap rates go up 0.25% or 0.5%, there's your $200,000 right there. If the property doesn't get to $1,000 on average, again, that's the $200,000. So you want to have a buffer. You don't want to go crazy and offer him 2.3 million or 2 million. It's just not going to work that way. But you want to have a little bit of a buffer when you make these offers. Now, this property was brought to us because the owner is in a little bit of a pickle, but he obviously is not in too much of a pickle because he was asking $3.6 million for the property. Well, you did your analysis, and $3.6 million is close to your $3.9 million stabilized. He is at way more than 5% vacancy. So he is probably around 8 to 10% vacancy rate. His property, the way it sits, it's probably worth $2.8 to $2.7 million. Actual price. You do not, and I will say this again, you do not want to overpay in multifamily. There's a lot of people out there right now in this market that are overpaying. Big institutional investors, large companies that are pouring money into real estate that have made the price per door skyrocket in the last 3 years. I am a little bit more conservative in my numbers. I'd rather hit a triple or a home run than hit a single and lose $200,000 or break even, because again, this is a 12-month process to get all these units from $800 to $1,000 is a 12 to 15-month process. It's not a quick 30-day, 60-day flip. If I lose money in 30 days, then I can go buy another house and make up my money. In multifamily, if you make your mistake going in, it will be painful going out. Hence the reason why this property owner right now will probably have to sell for less than what he paid. He is not going to get $3.6 million. He might get it from an institutional investor or large REIT that wants to park money somewhere, but he's not going to get it like He's not going to get it through an investor like me or other investors that, you know, want to add value and make money. So this is going to be a big fat no. We are nowhere near. We're nowhere near on price. He's at 3.6 million. I'm at 2.7 million. If we can get to maybe a 2.8 or 2.9, even $3 million, we might be able to get to a deal. But he's at 3.6. I'm at 2.7. I don't think it's going to work. So I said no to this deal. I sent in the offer. If he wants to make an offer, my offer is there. But I haven't heard anything back. So for me, this is a big fat no. But I stress to you enough, do not overpay for multifamily. I don't care if the broker's telling you that the rents can be $1,200, $1,300 in a year or two. Do not overpay for multifamily. I cannot stress that enough. That's it for today. Like I said in the middle of the video, subscribe to the channel, hit the like button, and I'm going to be putting more videos up in the future. Thanks, guys.